The dawn of America's crypto era. Why January 2026 could ignite the greatest financial revolution since the internet. Imagine a world where the United States doesn't just participate in the cryptocurrency revolution, it leads it. Where innovation thrives on American soil. Jobs multiply in blockchain startups from Silicon Valley to Wyoming ranches. And the dollar's dominance is supercharged by digital assets rather than threatened by foreign competitors. This isn't science fiction. It's the bold vision unfolding right now in Washington. D.C.SO, January 2026. We stand on the precipice of history. Senate Banking Committee Chairman Tim Scott RSC has officially scheduled the markup for comprehensive digital asset market structure legislation on Thursday, January 15, 2026. This isn't another vague promise, it's a documented step forward, backed by months of intense bipartisan negotiations. The announcement from the Senate Banking Committee website is clear. After releasing principles in June 2025 and enduring rounds of drafts, RFIs and closed-door talks, the time has come to debate, amend, and advance a bill that could redefine how the world views crypto. This legislation, often referred to as building on the House-passed Clarity Act and incorporating elements from drafts like the Responsible Financial Innovation Act, or FIA, aims to do what years of regulatory ambiguity have failed to achieve: provide crystal-clear rules for digital assets. It seeks to definitively distinguish between securities under SEC oversight and commodities under CFTC jurisdiction, establish registration regimes for intermediaries, enhance consumer protections, combat illicit finance, and crucially keep the next wave of blockchain innovation inside the United States instead of watching it flee to Singapore, Dubai, or Switzerland. Chairman Scott himself put it best in his official statement. This legislation is about making America the crypto capital of the world, so the next generation of jobs and innovation is built here, not overseas. When we set clear rules, we give entrepreneurs the confidence to start companies, hire workers, and grow right here in the United States. The stakes couldn't be higher. For too long, the U.S. crypto industry has operated in a gray zone of regulation. By enforcement, where the SEC and other agencies pursued aggressive actions without a coherent framework, companies have relocated offshore, talent has migrated, and trillions in potential capital have sat on the sidelines. This bill changes that equation. The markup. It's what it really means and why it's massive in congressional terms. A markup is the make-or-break moment in committee. Lawmakers gather to propose amendments, debate language, rewrite sections, and vote to advance or kill the bill. If successful in the Senate Banking Committee, and ideally in a parallel session with the Senate Agriculture Committee, which oversees the CFTC, the reconciled version heads to the full Senate floor. This isn't happening in isolation. The markup follows the passage of the Genius Act focused on stablecoins and builds on years of work by pro-crypto champions like Senator Cynthia Lummis-Arway, who has been a tireless advocate. Lummis recently emphasized the progress after enduring unhosted wallet restrictions, FTX fallout, Fed skepticism, market crashes, and vetoes like SAB 121. Bipartisan momentum is finally coalescing around legislation that provides lasting clarity. Both committees are expected to hold synchronized markups on January 15th, accelerating reconciliation between SEC and CFTC jurisdictions. Key issues under negotiation include DeFi liability, stablecoin yield permissions, investor protections, and preventing money laundering while avoiding overreach that stifles innovation. Even amid partisan tensions, the push is aggressive. Scott has signaled he's willing to move forward even without full bipartisan consensus. Underscoring the urgency, midterm elections loom, and delays could push meaningful progress into 2027 or beyond. The bigger picture. Trump's pro-crypto revolution. This legislative surge is no accident. It's amplified by the Trump administration's aggressive pro-crypto stance. In March 2025, President Trump signed Executive Order 14,233, establishing the Strategic Bitcoin Reserve and a United States digital asset stockpile. This digital Fort Knox capitalizes on forfeited BTC estimated at approximately 200,000 coins. and designates Bitcoin as a strategic national asset never to be sold, but held as a store of value like gold. The order mandates centralized custody under Treasury, ending the chaos of scattered agency holdings and lost private keys. It also opens pathways for budget-neutral acquisitions, signaling long-term government accumulation. This isn't just symbolic. It positions Bitcoin as a hedge against inflation and a tool for national economic dominance. Combined with other initiatives, no capital gains tax proposals on certain holdings, banking access reforms, and potential Fed policy shifts, the macro environment is electric. Bitcoin currently hovers around $90,000 as of early 2026. But analysts see this clarity as the catalyst for institutional trillions to pour in. Why this matters for you? The investor perspective: if you're holding cryptocurrency, whether Bitcoin, Ethereum, stablecoins, or altcoins, this is potentially the biggest tailwind since the 2021 bull run. Clear rules mean reduced regulatory risk gives more institutional adoption. Think pensions, cantions, endowments, corporations adding BTC to balance sheets. Onshore innovation gives jobs, startups, and economic growth. Staying in America's stablecoin evolution gives potentially allowing yield without draining traditional banks. Global leadership gives positioning the U.S. ahead of competitors. The calm before the storm is real. Thursday's markup could spark amendments that strengthen or weaken the bill, but the momentum is undeniable. A successful committee vote paves the way for Senate floor action, House reconciliation, and presidential signature, potentially making 2026 the year crypto goes mainstream. Challenges ahead. Not a slam dunk. Bipartisan support is growing, but hurdles remain. Democrats push for stronger consumer safeguards, limits on DeFi risks, and restrictions on elected officials profiting from crypto. Banking lobbies resist stablecoin yield features that could siphon deposits. A government shutdown threat or midterm politics could delay things. Yet the industry is rallying. Lobbying intensifies, and voices like Lummis warn that delays will only push more companies offshore. Final call to action. Don't miss this moment. America is on the verge of declaring itself the crypto capital of the world. With markup just days away, the path forward is clearer than ever. Whether you're a long-term HO dealer, a DeFi enthusiast, or a newcomer eyeing Bitcoin at $90,000, this is the catalyst many have waited for. Position yourself wisely. The printer may slow, rates could ease, and clarity is coming. The revolution isn't. Hypothetical it's happening now. Like, share, and stay informed. This could be the spark that sends crypto to new heights.